The New York session yesterday unfolded with the optimism. Trading volume was low on Wall Street. Still, the benchmark stock indexes closed with the gains. The growth was mainly driven by high-tech stocks. As a result, the Nasdaq logged the strongest performance. Now, Wall Street is digesting red-hot inflation data, and investors are revising their bets on the Fed's monetary easing. The S&P 500 completed the session yesterday at the upper border of the intraday corridor. The index climbed by 26 points or 0.57% to close at 4,783 points. The major stock indexes traded in the green in the New York pre-market. The S&P 500 approached the record closing level. Futures on the stock indexes grew by 0.08 and 0.47%. The intraday corridor for the S&P 500 is determined between 4,757 and 4,784 points. Important sellers' targets are 4,710 and 4,680 points. The buyers find it essential to return to the levels of 4,791 and 4,810 points. The economic calendar was empty on a Wednesday, so the market absorbed remarks by Fed's policymakers. New York Fed President John Williams said that it was too early to appeal for rate cuts because the central bank is still on the way to the target inflation annual rate of 2%. At the same time, supported by weakening treasury yields, stocks of Microsoft, Meta, and Nvidia rose, having the largest impact on the S&P 500 index. Communications services were the best performers of the 11 major sectors in the S&P 500, led by 3.65% gain in Meta shares. Shares of Facebook's parent company hit the highest intraday level since September 2021, after Mitsuha raised its share price target to $470 from $400. Nvidia shares hit a record high and closed up 2.28% after chipmaker TSMC beat the fourth quarter revenue expectations. Boeing shares grew by 0.92% after collapsing by 9.3% in the previous two sessions. Already on Thursday, index futures spent most of the pre-market in the green zone, awaiting key data on inflation in the United States. At the same time, the S&P 500 index was up more than 2.2% at the moment and was within a year's breadth of its all-time closing high of 4,796 points recorded in January 2022. The index was missing 3 points, but the release of inflation data cooled risk appetite. The inflation report confirmed persistent inflationary pressure with the CPI higher than expected. Consumer prices in the United States rose by 0.3% in December from a month ago, an uptick higher than the 0.2% estimated, and the reading is the strongest in the last 3 months. House prices carried on growing, providing more than half of the monthly growth of all consumer goods. Energy prices increased by 0.4% because electricity and gasoline prices offset a decline in natural gas prices. The annual CPI accelerated to 3.4% from a 5-month low of 3.1%. The consensus had suggested a milder rise to 3.2%. Energy prices fell at a slower pace, but prices for food, housing, and new vehicles rose at a slower pace. The core CPI, excluding volatile prices, slipping below 4%. It's a good news and the best reading since May 2021. Core inflation fell to 3.9%, higher than the expected decrease to 3.8%. Core inflation grew by 0.3% in months, the highest index in the last 3 months, and also higher than the consensus of 0.2%. The Labor Department reported that initial unemployment claims rose to 203,000 in the week, ended January 6 from 202,000 a week ago, and this is below the market forecast of 210,000. The new pool of data is quite alarming. It points to still persistent price pressures and a tight labor market. All this casts doubt on the market's optimism regarding the imminent Fed rate cut. And later today, traders will be able to hear comments of the Fed policymaker who already has got up-to-date statistics. Richmond Fed President Thomas Parkin, a voting member this year, is on the microphone today. Meanwhile, in the corporate sector, crypto stocks such as Coinbase, Bitfarms, and Riot platforms jumped by 6 and 9% after regulators approved their first US-listed Bitcoin ETFs. Netflix shares rose by 2% on reports that it has reached more than 23 million monthly active users worldwide. Job cuts at major US technology companies are also driving attention. Google said it was laying off hundreds of employees across multiple teams, with Fitbit co-founders James Park and Eric Friedman also leaving the company as the tech giant continues to cut costs. Amazon said it would lay off several hundred employees in its team and studio operations. The US dollar index traded lower for the most part of the day. Following the inflation data, the greenback rebounded against major currencies. Its index opened the New York trade at 102.60. The baseline carried for today is seen between 102.30 and 103.70. Going beyond these borders could push the instrument down to 102.10. Buyers' targets are seen at 102.93 and 103.10. The dollar received support from the US inflation data, while optimists may still find a silver lining in the inflation decrease to 3.9%. The pool of data has acted as a red flag for traders who are too optimistic about rate cuts in 2024. Fed speakers now have more hawkish arguments, but don't forget that factory inflation data is on investors' radars later this week. So it's still too early to make conclusions. On the back of stubborn inflation in the United States and the greenback's recovery, the Canadian dollar is pulling back. The USDC pair is trading at about 1.3401 or 0.18% up. The instrument is expected to trade in the intraday corridor between 1.3351 and 1.3420. Even though oil prices were creeping up again today, the recovery in oil prices was not enough. Thus, the Canadian dollar gave in to its American rival. The economic calendar is empty for Canada this week. It means that there is no way for the Canadian dollar to get additional support. The most likely scenario is a further weakening of the loonie. Meanwhile, the crypto market signed with relief and declared it's done. On Wednesday, the US Securities and Exchange Commission approved the first 11 applications for exchange-traded funds to track Bitcoin. Most products are expected to begin trading today, issuers said. Analysts at the Standard Chartered this week said ETFs could attract between $50 billion and $100 billion this year alone. Other analysts said inflows would be around $55 billion over 5 years. Bitcoin surged on the news, closing at a 22-month high of 47,915 yesterday. The cryptocurrency has rallied by more than 70% in anticipation of the ETF approval and hit its highest level since March 2022 this week. As for the intraday outlook, the base range suggests trading between $45,600 and $47,000. Going beyond these borders can lead to the token down either to 44,700 and 43,500 or up to 47,200 and 48,100 and above. You have watched the review of the New York session. Feel free to ask any questions. Our analysts are always open for your feedback. Subscribe to InstaForex TV channel to keep close tabs on the financial markets. And see you online tomorrow.